So recording started. So let's start with the first lecture on financial instrument. So a financial instrument is covered by three different standard, and today we are studying IFRS 9 specifically. So it was first issued in July 2014, and it is applicable from the from 1st January 2018. That is, any financial instrument prepared on or after 1st Jan, we have to comply IFRS 9. So uh, there is an option to adopt this standard earlier than the mandatory date. That is, we can also prepare our statement in during 2017 or 16. So HSBC adopted it earlier than mandatory date. And this was the replacement of IS 39, which was also covering same part, recognition and measurement, but there are many exceptions, and there are some typical topics also in IS 39 that was confusing. So IASB decided to come with the new standard, whole new standard. So they replaced IS 39 with IFRS 9. So currently, financial instrument is covered by three different standards. That is IS 32, which covers presentation part, and IFRS 7, which covers disclosure part, and recognition and measurement for financial instrument is covered by IFRS 9. So these three combined standard cover whole area of a financial instrument. So IFRS 9 specifies how to classify and measure three things, that is financial assets, financial liabilities, and some contracts to buy and sell non-financial items. We will discuss all items later. So next question is, this standard is specify when we recognize any transaction in our balance sheet. So what is the occurring event in short? So we recognize any contract, any transaction as soon as we become a contractual party to this transaction. So when it becomes party to contractual provision of this instrument, so as soon as we enter in any contract, we should recognize this transaction balance sheet. So next thing is in IFRS 9 is recognition, that is initial recognition and classification. But before moving to main provisions of IFRS 9, we should clear on some definitions. So we begin with the definition part. That is, so first definition in financial instrument. What is the financial instrument? So it IFRS 9 defines as any contract that gives rise to both. It means a contract that gives rise both means if in any contract there are two parties, so it is a financial assets for one party and financial liability or equity instrument for another party. See, the both conditions should be satisfied to classify any instrument as financial instrument. Now next question is, what is a financial assets? So five things are defined in financial assets. These five things only are financial assets. Neither anyone except this is not a financial assets. So first thing is cash, and second thing, contractual right to receive cash or another financial assets from another entity. Like we have debtors, we have a right to receive cash or other things from our debtors. If they are unable to pay cash, they pay in kind or vice versa. So this is for debtors. Third is a contractual right to receive, contractual right to exchange financial instrument with another entity under condition that is potentially favorable. So two examples are covered in this, that is option and future. uh, Everyone knows in option what we do, we entered a transaction to purchase a specified securities at a later date when it becomes favorable to me. Like market rate is 10 rupees, but we have a contract to purchase at 9 rupees, then only we will exercise this option, otherwise we will not exercise. So this is the written here, that is potentially favorable. Next part is equity instrument of another entity, like we have purchased equity of any other entity. And fifth thing is certain contract that will or may be settled in entity own equity instruments. So sometimes we shoot convertible bonds. At time of issue, it will be a debt instrument, but later at the time of maturity, instead of paying principal amount, we issue equity in exchange of bond amount. So that example is covered in this part. So these five things are only financial assets. So likewise, financial liability has three things, like a contract to deliver cash or another financial assets to another entity, that is our creditors. In terms of HSBC, this covers the deposit from customer, and to exchange financial instrument with another entity under condition that are potentially unfavorable. So uh, again, this is covered by example of put and option and future. So in any option, like we sold a put option, not purchase. Put option is right to sell. So mm, so right to sell. So in any condition that is unfavorable means uh, market rate is 12 rupees, but we have a contract to sell our equity at rupees 10 in future date. So the is put purchaser will exercise his option and purchase equity from us at rupees 10. So we have to sell in unfavorable condition. So this is covered in this example. And third one is certain contracts that will or may be settled in entity or own equity instruments. And next definition is for equity instrument. So these are self-explanatory, nothing specific in this. Any contract that evidences a residual interest in the assets of an entity after deducting all of its liabilities. So everyone know equity is the residual interest in the assets of an entity. And fair value is same, self-explanatory definition. Fair value is the price that would be received to sell an assets or paid to transfer a liability in an orderly transaction between market participants and at a measurement date. So simply means simply any fair transaction, that value is a fair value. So these are important definitions in IFRS 9. Later we will discuss about the initial measurement and how to classify. So initially all financial instrument is measured at transaction price. Later record, we classify it. There are two tests defined in the IFRS 9 to classify financial instruments, that is business model and contractual cash flow test. So based on that we will classify it at amortized cost or fair value. Under fair value we have two options: fair value through OCI and fair value through uh, profit and loss. So in later sessions we will cover that portion. And it also defines when to de-recognize a financial instrument, like when we paid our creditors in full, then we can de-recognize the creditor from our balance sheet. And many more criteria are defined in the to be recognized. And third is hedge accounting is covered by this standard. So there are many things to discuss in this standard. Currently, I'm
So there are three part in IFRS 9: measurement and recognition and hedge accounting.
yes.
So currently it's like today we have just covered some measurement
Yeah.
portion.
Actually, I not prepared notes, but I can explain.
Okay, okay.
It is
So
better.
we can
Mm,
just we can do it later. So
mm,
just for like there is one point like
mm,
in IS 39 and IFRS 9, what is
mm.
the major difference in
So
both?
major difference is ECL. We have expected credit loss model introduced in IFRS 9, and there are many exceptions which are inserted in previous standard that creates confusion. So that all is replaced and is
I think
deals
I'm not sure. I'm not sure, but I think the difference is in there is in recognition part, the approaches of recognition.
Yes, yes. That's why it is
I
two model.
read somewhere,
Yeah, two model
but
introduced in IFRS 9, and
okay.
like business model test and contractual cash flow test. These two
Yes, earlier
tests.
it was
Mm,
earlier the recognition part was very simple, but right
mm.
now they classified it to more elaboration with the right examples. So
But
I think
ECL
that
are
is
also
different.
not in old standards. This is introduced in new standard. So ECL is
Okay.
a big change for any banks. So currently Indian banks are not preparing their balance sheet as per IFRS. So anytime when Indian bank will follow the IFRS, Ind AS, then it is a drastic change in their profit and loss. Because currently when we recognize NPA, when any customer not pay their dues for more than 180 days, then we recognize NPA and create provision in the our profit and loss. But in ECL approach, we have to regularly watch
Yeah,
what is the,
do it
yeah,
regularly.
mm,
Yes, we
we
have
have
to
to maintain
consider
risk
simultaneously.
profile of every customer staging and CRR,
Yes,
what we do in HSBC.
and that is a better approach, I think, because we have to
Yes,
take
yes.
risk
Mm,
simultaneously.
yes.
Mhm.
So today's session is short session, and I have limited time to prepare notes, so I cover the definition part.
So there would be a financial contracts entered, then we can say that we can just start IFRS 9 preparation like.
So first question here written is when do you recognize any financial instrument? So as soon as we becomes a party to contract, we should recognize this. That means as soon as we re-entered contract with our creditor to uh, supply materials, and they actually supplied material, then we can recognize.
Okay, if you have like contract, then we can say that we can just work on
Mm,
IFRS 9. Like, what would
mhm.
be the like definition of recognition in simple layman language?
Mm, Definition
Like,
of
I
recognition. So it
what is
means
recognition?
so recognition is simply when we can record any transaction in our books.
Yeah, so that if like we have just entered in a contract,
Mm,
so we just entered like what we purchased, debit to cash
yes,
con. So we
but
can just write
we
down the end
first we
the like
enter an agreement
open
with
up.
supplier to supply specific
Yep.
material. Then second stage is they actually supplied material and we receive in our factory or shop, and they
Mhm.
sue invoice. So we have a value then when they supply, because before that we have only contract to supply any material at a specific rate, but it is not supplied it. Like in case of service, first we have to enter agreement that any service provider will provide specified services, and we pay on monthly basis uh, or
uh, but
completion.
but
com-
it is not compulsory that in every contact we have some buying or selling.
Mhm.
This will be applicable when once it is a financial asset for one party and another the financial liability for second party, and then
Mm,
the applicability come into the picture.
mhm. but but until a real transaction is not happened, how you can recognize any amount? There should be like there like a long service, around 6 or 12 months if any service, then we recognize a part, like part performed till 31st March and part will perform later to 31st March. So we recognize that part which is performed up to 31st March. we recognize liability, and later when service will complete and service provider raise invoice, so difference amount is accounted for in the balance period.
Mhm.
Okay.
That's great. Okay, so I think so. No question from my side. We'll go through the notes and then we'll connect offline. If is there
Mhm.
any point or any
So these definitions are
queries?
important. It will help to
Yep.
understand later. So I think what is the financial assets? It can be asked in any question in interview.
Yep.
Ravi, about this financial asset,
Mhm.
the 5 points, it can be anyone, right?
Mhm.
Or
Yes,
all.
any one of them.
Okay.
So just for a question, what is what you classify to prepaid expenses or financial assets or not?
Yes.
How?
Let me think.
Just
As the prepaid expense, we have just paid the cash in advance, so that is the cash is
but it is
the
not
part
covered
of.
in any definition. Not neither in cash, not a contractual right to receive cash.
No, because it
But
will be
that
the financial liability for another party, and we have paid it is a financial asset for us. So, the condition, two conditions are
How it is?
satisfied,
How
and
it
it
is a
should be of
financial?
later date.
How it is a financial liability for other party? If I pay anyone in advance, so how it is a financial liability for others? They show it as advance receipt from customer, not
Uh,
in not in creditors.
but once the month will pass, that it will be the liability in the future dates.
In the future days, but suppose you are preparing balance sheet at 31st March and you paid certain amounts to laborers and they are working in your factory. So is it a financial assets for you?
so there would be a contract as well. Like we have paid to the labor before that. If we do the contract that we will pay in advance before the later of the month, you have to complete the reimbursement like construction work.
But this
So it's like
consider these 5 points. Is it can be covered in any point? So I don't think E, D,
uh,
and C three are completely uh, a different point. Only B you can consider in this
on
criteria: contractual right to receive cash or another financial assets from another entity.
yeah. So that I told you that if there is a contract, like if I uh, contract with a contractor to complete the work within a month, and we will pay maximum of the amount in advance.
Mhm.
So like in prepaid advance, you can say that there should be a contract. Then we can say that. Otherwise, that will not cover.
I don't think it is covered in any of the examples. But let's do a Google. So, but you can see this is not a financial assets. Hello, hello.
Yep.
Oh,
Yes. Yes.
you can see my screen, I think.
Yes. Yes. Okay. So
So
prepaid
these are some
expense like
yeah, prepaid expense, and same way And second question, what about the outstanding expenses? Like we phone bill is due, but we not paid. So is it a financial liability or not?
That will, because if we are not, because we have already like
We
used
have
the
a liability.
services
We
and
have
we
a
have to pay.
obligation to pay. That is covered in our
Yeah.
uh, uh, this part, to deliver cash or another financial assets to another entity. So we have an obligation to pay our bill,
Hmm.
which is due already. So outstanding is liability is no doubt is a financial liability.
Yeah, like at morning, Smriti said that electricity bills is very high, so she have to pay, otherwise they will cut their electricity.
uh, Smriti, ma'am, you can switch off your AC.
I will.
What is Ravi?
Uh,
What can you give us me an example? What
Mhm.
transaction will not be considered as financial, you know,
Liability.
financial transaction? I mean,
Sorry, what transaction cannot be covered in financial instrument?
huh.
So any transaction which does not satisfy the condition of financial assets or financial liability will not be covered in financial instrument. So financial instrument first definition is any contract that gives rise to both. Means it is a financial assets for one entity and it should be financial liability or equity instrument for another entity.
Aren't all the transaction like this only? Or if I'm missing anything?
Uh,
साइड
I,
ट्रांजेक्शन तो होती है
I'm
ना
saying, sorry.
साइड ट्रांजेक्शन ऐसी ही तो होती है ना एक का सेड और एक की
Mm,
लायबिलिटी
नहीं, assets liability नहीं, financial assets and financial liability. It should be a financial
फाइनेंशियल
assets. Yes.
ओके एक्सेप्शन ओके ओके सो ओके गॉट इट
Hmm. सो हमें ट्रांजैक्शन वाइज देखना पड़ेगा कि वो ट्रांजैक्शन की दोनों साइड क्या है। सपोज एक कोई ट्रांजैक्शन है जिसमें एक साइड तो हमारी कंडीशन फाइनेंशियल एसेट्स की सेटिस्फाई हो रही है, बट दूसरी साइड पे वो नहीं हो रही है, तो वो फाइनेंशियल इंस्ट्रूमेंट में कवर नहीं होगी।
ऐसी कौन सी ट्रांजेक्शन हो सकती है कि एक साइड में सेटिस्फाई हो रही हो दूसरे में ना हो रही हो ऐसी तो कोई नहीं हो सकती आई थिंक अपार्ट फ्रॉम बुक एंट्रीज एंड ट्रांसफर एंट्रीज और कॉन्ट्रा एंट्रीज
अब इसकी
बाकी
इसका पहला
सारी
एग्जांपल तो इसका पहला एग्जांपल तो प्रीपेड एक्सपेंस ही दे सकते हैं, हमारे लिए तो फाइनेंशियल एसेट्स है वो।
हाँ वो बुक एडजस्टमेंट एंट्रीज जो होती हैं वो इसमें नहीं आएंगी बाकी दो
हाँ।
पार्टीज के बीच में अगर कोई ट्रांजेक्शन है तो फाइनेंशियल
हम्म।
ट्रांजेक्शन ही होती है राइट
हाँ,
यही है ना
लाइक
मतलब
इसके
इसका
साथ चैरिटी
correct।
चैरिटी भी इसमें नहीं आएगा। चैरिटी हम जो देते हैं वो भी तो इसमें नहीं आएगा ना।
क्यों मैंने चैरिटी अगर क्रिएट कर ली
नहीं,
अच्छा
आपने चैरिटी ड्यू
हाँ
कर दी
अगले
है
का
ना।
राइट थोड़ी है
हाँ।
अगले का राइट थोड़ी ना बन जाता है उस पे
वही।
ओके
और हमारी टैक्स की ट्रांजैक्शन भी।
हम्म नहीं टैक्स में तो
टैक्स हमें स्टैट्यूटरी ड्यू
टैक्स
हमें
में
देना
तो
ही पड़ेगा वो तो। हम
तो
कंट्री में
अगले
अगर
के लिए
बिजनेस
भी तो
कर,
रिसीवेबल खड़ा हो ही जाता है गवर्नमेंट के लिए जो हमारा ड्यू होता है नहीं
उनको उनको क्या पता कि हमारा कितना इनकम है क्या है। हम तो सेल्फ वो करते हैं ना, सेल्फ अपना रिटर्न फाइल
अच्छा
करते हैं,
हमारी
बाद में
हमारी
असेसमेंट करते हैं वो।
लायबिलिटी बन जाती है पर बुक्स में थोड़ी बुक्स में कहीं रिकॉर्ड नहीं होता किसी की बुक्स में कि रिसीवेबल है हमसे टैक्स ऐसा
नहीं, हम
इसीलिए नहीं
प्रोविजन तो
आएगा
बनाते हैं ना। हम टैक्स का प्रोविजन तो
हाँ
अपने
हमारी लायबिलिटी हुई पर किसी और के लिए वो एसेट
हाँ,
बुक्स में क्रिएट नहीं होता
गवर्नमेंट की बुक्स
इवन
में
दो
वो
वी आर
नहीं
लायबल
होता।
टू पे हाँ
हाँ।
तो वन साइडेड ट्रांजेक्शन मानी जाएगी बुक्स के हिसाब से ठीक है
गवर्नमेंट की बुक्स में कोई एंट्री नहीं होती कि हम इनसे इतना टैक्स लेना है।
चैरिटी और
हम्म,
टैक्सेशन ये मान
हम्म,
सकते हैं ठीक है
हम्म। सो वाइंड अप करते हैं आज का सेशन। आई थिंक कोई क्वेश्चन नहीं है किसी की तरफ से।
Yes, yes.
ओके
So we can wrap up.